Hey traders, welcome to Charts and Coffee. Great to see everyone. Happy Tuesday. Hope everyone had a good long weekend, a restful one. A little time away from the charts never hurts. We did do a little bit of homework yesterday, so if you have time later today or you want to check it out, over at the Simpler Trading YouTube channel as well as my YouTube channel, we have the Monday primetime edition of the Raghee report that you can catch the replay of. And we also have Charts and Coffee from yesterday as well. A lot of great questions in both those sessions. So let's kick off today's session with a quick look at what's going on with the broader averages. And, at this point, I think a lot of you probably are in the good habit of, okay, Rag, I've already checked out the economic calendar. I have a good idea of what's coming and I'm ready for it. And that's great. And then, once we know what those hot zones are, we're going to wait for those hot zones to drive price to levels that are actionable, right? We'll talk more about that, I'm sure, today. All right. So let's get to our first questions. We got the free trading room here today. Good to see everyone there. Very cool. And let's see. Sound on the YouTube channel, I think we're good, although I could be wrong. I think we're good there. Bot, do we have sound? Oh, hang on. Sound is fine on both. All right, we're good to go. All right, let's tackle the first question, shall we? And that is jumping on over to the YouTube channel. Could we take a look at Boyle? Yeah, absolutely. So for those of you that may not be familiar with Boyle, which I'm happy to look at, we do need to go upstream a little bit to Boyle. All right. And let me actually type in the symbol one more time. Do you see how it is right there? It's an ultra, right? So anytime you see ultra or 2x or 3x or anything like that, there is then a touchstone market. There's another market that is something we need to look at first. So Boyle's in a downtrend, and that makes perfect sense. UNG, which is not a leveraged product, it's the ETF of natural gas, also in a downtrend. Again, natural gas futures are in a downtrend. So the only way right now, and this has been something I've been asked a lot about, which is fine. The only thing we can do right now, one of two things. One is, and by the way, every iteration, Joker Trading, you mentioned cold, all of it is still just natural gas, right? So as long as we understand everything's rooted in the downtrend that is still in natural gas. So natural gas being in a downtrend means that the only thing we can do is focus on UNG, further dated out option with a 50% risk, right? They're very inexpensive. It's a reasonable amount of risk to take for an extremely aggressive idea, right? And I will say this is something that I've been asked about a lot. And I hope a lot of folks who really have been wanting to jump the gun on this realize when you do jump the gun and try to bottom pick in a downtrend, you're going to have to take heat, right? And the position that I helped folks design with the seasonal in mind is designed to take heat, right? Always risk first. Always, what's it going to cost me if I'm wrong being the primary driver for the way that we position. So frankly, there is no position I would recommend to the long side. I'm not really interested in the short side. And I do have a very, very aggro position that I've walked the Sector Secrets Mastery folks through using UNG. And again, whether it's UNG, Boyle, and every other iteration of it, inverse, leverage, it's all rooted in natty. So thanks for the question. All right, next up, Robert, can I take a look at XLI and LMT? All right, let's go do this. Let's jump on over to the multi-chart for the XLI. And here we go. All right, multi-chart for the XLI. XLI is in an uptrend. We can see that there. And also our Boeing and GE. So you're looking at LMT I would say let's take a look at GE and Boeing. That would be the priority. Boeing's pullback, GE's pullback, even UPS. I would focus on first, right? Can't decide. I would not even consider that, Robert. I would not even consider that one of the boats to focus on, right? Because the structure. So XLI is fine. I'm with you there. Check the liquidity though, unless you want to play shares. Check the liquidity on the option. That could be a little tricky. But what I would say, if I may, my friend, GE and Boeing should be before that, right? GE and Boeing should come before that in terms of prioritizing the uptrends. All right. Cot asks, how you doing, Cot, from our free trading room? NVDA. All right. Sure. NVDA. Short term. I need a time frame, Cot, because I don't predict things out where something going to be in 1 month. Nobody can do that, right? Nobody really can do that. Everyone likes to pretend like they can talk about what's going to happen at some point later in the year, right after June or after. We don't know, you know. So I don't know what 1 month means, but if you let me know what time frame, I'm happy to be a little bit more detailed. The daily time frame is in an uptrend, so the path of least resistance is up. I'd focus on being long. If we take a look at the 1 hour, that is in a downtrend, right? That is in a downtrend. So the idea there is follow the interval. So again, Cot, you asked for 1 month and now you're asking 3 to 6. I cannot, nobody can tell you where something is going to be in 3 to 6 months. Am I making sense? I really don't want to leave you with any confusion here, my friend. Nobody knows where the markets are going to be 30 days, right? 60 days, 180 days from now. What we can do, and this is and I think this is really going to help a lot of people because, gang, when you go and watch television, what do those people, what do those jokers do? They tell you where a market's going to be. Well, if you know where markets are going to be, pal, right? Whoever this is on television, why are you on TV? Clearly, you're just picking winners and living on an island, right? I can't tell the future. And I would never, ever say that any of us can. However, we can identify on different time frames. This is what we can do, right? I don't want to be a downer. This is actually great news. We don't have to see the future. Number one, what a relief. Don't have to work that shift anymore. What we can do is identify the structure on a specific time frame. 5 minute, 1 hour, daily, weekly, 30-minute, whatever you like, and say, what's the structure, market trend, up, down, sideways, on that time frame, and then which direction would I like to trade it in, right? Whatever the path of least resistance is, and then find the zones. So in the case of Nvidia on the daily, right, which if I want to be a buyer, let's say you say, Rog, but I want to be long in Nvidia. Cool. Let's turn the daily price movement ranges on that daily. Okay. And then say, all right, where can I be long from? Good news. I can see that about 209.80 to about 206 and a quarter is a daily price movement range, volatility-based support level happening within an uptrend. Do you see what we did there? It's a very different thing than the absolute garbage that's paraded around on television, where these people are maybe prompted or forced to tell folks where things are going to be, right? We don't know. But what we can do, this is the process, gang. This is what's timeless. This is what you're going to build your trading future on. Not predicting the future, but rather what's the structure on the time frame that I'm looking at. And by the way, the difference between the 1 hour and daily, you might say, Rog, what's the difference? The 1 hour is going to have a shorter time horizon. I'm going to be in the trade for a little less time as opposed to having the daily time frame. All right. So that's just pure structure on Nvidia. Gosh, gang, I hope that resonates because if there's anything that I hope to impart on anybody here in Charts and Coffee or the Raghee Report or whatever is we don't have to predict the future. Neither can we, but we don't have to. Now, there is a wild card here. I've got earnings. So I'm not going to do anything with Nvidia or any stock that's within 48 hours before earnings until after earnings. We have a really cool opportunity, Cot, to be able to wait for that volatility and then react to whatever it is we get. We'll see as the dust settles, is there an opportunity? Are we then at an actionable level? Because then the other dumb thing that a lot of traders like to do is guess which way earnings are going to go. I don't hate my money that much, right? So I'll avoid earnings 48 hours, right? We'll play 2 earnings. Fantastic rally into earnings here, right? Get out 48 hours, wait a session or 2 after the hot zone of the earnings, and then look to see as the dust settles what we have. I hope that makes sense, gang. What you all got there is a quick boot camp on what I've been doing for 30 plus years. It just works. It's not fancy. It just works. All right, next up, Mr. Walker. Let's see, DKNG on the 1 hour. Buy the pullbacks, my friend. Buy the pullbacks. Yeah. So what I'd like to do is wait for a bullish structured market to have a reversion to the mean, aka surf the wave. If I get that opportunity, especially around 20 to 19 and a quarter, that would be a pretty cool. That would be a pretty cool setup. I do like that. And then of course, we can see why we launched the way we did. That's earnings. Give it a moment. Give it some time to settle, and then take advantage of the 1 hour mean reversion. What's a mean reversion? It's a pullback. It's a retracement, right? How do we measure that? For me, it's going to be the 34 EMA wave. Sometimes the DPMRs will kick in there as well, which is great. Then I've got a price reason, and I've got a volatility reason to find support. Okay, next up, what is my take on Boeing and UNH? Well, we took a look at Boeing, Peter, just a moment ago. I like that structure within the XLI. It's an uptrend. And then United Health. So now let's do this. Let's go ahead and dive into the XLV, right? This process of the multi-chart is one that we rely on for scanning in the Sector Secrets Mastery because, well, frankly, it's the best darn way to do it. And what we're doing is we're comparing the structure of the stocks that are heavily weighted within healthcare. Yeah. So let me show you what that looks like. And here it is, XLV. There we go. So there's XLV. Yeah. And what we want to do here is ask ourselves, where's the best structure? Gang, best structure is almost always going to be an uptrend. The next best structure is usually, quite frankly, bullish chop above the 200 propulsion. And if what I just said, Rag, okay, that sounds good, but I don't know how to recognize that. This Thursday at 8, gang, I'm going to go through how I do it. I'm not going to just say, this is what I do. I'm going to show you how I do it on Thursday. So if you haven't registered already, simplotrading.com/auto. All right. So now what we want to do is ask ourselves, what has bullish chop and is above the 200? Look at TMO. Look at AbbVie, right? Maybe Lilly. It's got to stabilize here. Barring any uptrends, my next favorite underlying market behavior, market trend, chop north of the 200 propulsion. Then we can look at shorts. Shorts are very difficult in this environment. The two trends here are shorts in Johnson & Johnson, shorts in Amgen, shorts in Pfizer. So no uptrends, a couple markets that are in chop above the 200, and then I've got 3 downtrends. That's how I'd build out the list. And then UNH actually doesn't fit any of those criteria. So Peter, do you see here, I didn't choose a stock that I want to trade. I focused on stocks that share something in common. In this case, their involvement in the healthcare ETF, which is a very important sector. So I love that you're looking at it. And then I asked myself, okay, is it displaying the kind of structure that leads to high probability trades? That's where the wheels fall off the wagon for a lot of traders. So I hope that makes sense. And then it's very process driven, right? If we're not process driven, then we're trading with emotion or we're following somebody else's opinion. And neither of those things are going to take us anywhere we want to go. If there is anything that you might do, Peter, on UNH, is there might be a fade around 505, 506. And that's a short, overbought fade. So that could be something to look at. All right. Next up is, so again, gang, I know, and I'm seeing some more Nvidia come through. Please, gang, do not look at earnings as a high probability setup. I know it's exciting. I know because of the volatility, it sounds like it's a time that we should be trading. Gang, I don't trade earnings, and my life is probably much more calm and peaceful and arguably profitable because I'm not playing these highly binary, incredibly volatile events, right? Let's think of it this way, and maybe humor me one season. Yeah. Play the 4 to 6 weeks before earnings. Be done with that stock in that 48-hour to release window. Come back 1 to 2 sessions later. So 2 sessions before earnings, be done with it. 2 sessions later, let's see what as the dust settles, what we have. And you're going to find there are some great plays going into earnings and stopping, and then after earnings and starting again. All right. So yeah, as far as Nvidia goes, it's going to be a post earnings conversation. Yeah. All right. Next up is, what is my take on LI? Sure. Yeah, buy the dip. This would be a buy the dip. Right. Buy the dip, surf the wave, north of 200, green grab candles. Yeah, looks good. Looks good. I would focus on buy the dip. And then, oh, wait a minute though. We're 20, so the 27th. This is tricky. This is tricky. So today is the 21st. You've got 5 days. That could be one of those situations where I might say shorten the time frame so you could be a little bit more nimble. The proximity to earnings, I know it's outside of 48 hours, but remember, inside of 2 weeks, and you probably know this, Tom, but I'm just reminding everybody, inside of 2 weeks, the implied volatility increases to such a degree that it favors traders who like to write premium, right? It favors those folks who are collecting credit, writing premium. And therefore, it's not necessarily my cup of tea, that proximity. But as far as structure goes, really good stuff. All right. Question about SPX. All right. So SPX is going to have the same setups and structure, by the way, that the S&P futures, the ES have. SPX is not going to do anything differently from the ES. It's just going to be a different symbol that we can take advantage of, especially for those of you that like to play those zero-dated options in SPX. Cool. Same thing with SPY, right? Same thing with SPY. It's not going to do anything differently than the ES futures. So everything's rooted in what's going on with the nearly 24-hour global opinion of what the S&P is doing, that ES. And that you can see we're pulling back. We are pulling back, probably a deeper mean reversion, definitely a reason to start looking at XLV, XLF, and possibly even calls. We'll definitely be keeping that on the radar. All right. Okay. And so thank you for that question on SPX. Questions. Can we take a look at CMG? Sure. $1,600 stock, usually not something I will wander into, Eva, but it is a buy the dip. Yeah, it's a buy the dip. You bet. All right, last question for the morning. Qualcomm. Sure, hey there, Kevin. Buy the dip. Yeah, I would say focus on buy the dip. I would definitely say focus on buy the dip. And be a little careful. Probably wait for a nice price pattern. Or maybe look at some volume levels. And that could be very interesting. I'm looking at some volume levels with the V-score. And I'll tell you what, my friend, maybe a -1 standard deviation could be interesting as far as confirmation. As we have a reversion to the mean, what could we get? All right. Gang, just like that, time is up. Our show goes from 9 to 9:20. I just go right down the list. So thank you as always for your questions. Gang, I'll see you tomorrow. Same time, same station. Again, gang, remember, we don't predict. We find zones that we can react to. Traders are counterpunchers. They're not oracles. I know we like to celebrate the people who somehow seem like they're seeing the future. That's far, far, far less the reality of what trading is. So if I could tell the future, I probably would share that with you because, hey, At the end of the day, I think us traders have got to stick together and support each other. If you want to learn how I find zones in a very transparent, volatility-driven way, check it out this Thursday. It's coming up, day after tomorrow, 8 p.m. New York time. I put New York time in there, 8 p.m. Eastern. All right, gang, simplertrading.com auto. All right, be good to each other.